Buyer's market holding strong despite rate cut speculation. Jordan here with your Fraser Valley market update for September of 2025. August was quiet. Sales dropped more than 20% from July, landing at just 931 transactions, 13% below last August and 36% below the 10-year average. Despite the slowdown, inventory held relatively stable at just over 10,400 active listings, and while that's 2% down from July, it still puts us deep in buyer's market territory. The sales to active listing ratio sits at just 9%, and as a reminder, the Fraser Valley Real Estate Board considers a balanced market to be between 12% and 20%. This means more inventory, more negotiation leverage for buyers, and softer price trends as we head into the fall. The composite benchmark price dropped 0.9% month over month to $936,200. Detached homes fell to $1,436,800, down 1% from July and down 5.7% year over year. Townhomes dropped to $807,800. That's down 0.9% month over month and 4.5% annually. Lastly, condos declined to $514,100, off 1% from July and down 5.9% from last year. So far, the price declines have been orderly, but it's clear that the spring bump wasn't enough to carry momentum through the summer. The average days on market in August stretched out again. Condos were 41 days to sell, up from 38 days in July. Detached was 38 days, that's no change from July, and townhomes were 32 days on market, down slightly from 35 in July. But when you look at the median days to sell, it paints a slightly different picture. Detached were 27 days, that's up from 21. Townhomes were 23 days to sell, up from 20, and condos were 26 days to sell, again up from 23. That means while slowing, some properties are still moving quickly, likely ones priced well or offering standout value, but many others are sitting and for much longer. Across the board, failed listings dropped compared to July, but that's seasonal. Most sellers hold off in August to reposition in September. Expect a wave of relists this month, which could add even more pressure to an already elevated inventory level. The next Bank of Canada rate announcement is scheduled for September 17th, and with news of significant job losses over the summer, the Bank of Canada is being pressured to cut rates. Even with whispers of rate cuts though, buyers remain hesitant. On a positive note, at least for mortgage holders, 5-year bond yields have finally started to trend down and are currently sitting at roughly 2.75% at time of recording. With any luck, we'll see a break on fixed rates as a result. Regardless, consumer confidence remains shaky, job losses, political uncertainty, and inflation are still very real concerns. Delinquencies remain low, but are ticking up slightly, a trend worth watching, even if it's not a red flag just yet. Anecdotally, showings were light basically across the board in August. I had one quick sale, an accepted offer inside 7 days for 99% of list price, but I've also had listings with little to no activity at all. Some condo segments still see competition, but they're the exception. Overall, the market, it just feels sluggish. September has historically brought a bump in activity as people return from summer vacations, but this year I wouldn't expect more than a nominal increase. The broader economic outlook seems to be overpowering seasonal trends. So where does that leave us? Well, locally we're facing high inventory, soft sales, and falling prices. Nationally, growth is stagnant and consumer confidence is low. Buyers are waiting for better deals and sellers are hesitant to drop prices, which means this standoff continues. If you're buying, well, you've got leverage. If you're selling, you need to price aggressively and strategically. But hey, be thankful you don't live in Ontario. Their prices have cratered even more sharply in several key markets. As always, if you want to dig deeper into your neighborhood or property type, check out the market area page at jkre.ca or reach out directly. Whether you're thinking of making a move now or just want to plan for the future, I'm always happy to help. Thanks so much.